And Roger, it's not just oil prices this morning. If you look at wheat, if you look at corn, if you look at the metals, especially palladium this morning, you're seeing some pretty significant increases. What is the Fed thinking as it heads into this meeting next week, seeing those moves?
I think the Fed is thinking a couple of things. One, and you saw it in Chairman Powell's testimony, this is a period of uncertainty. But what is certain is that inflation is above the target that they have set over the longer period of time. So I think ultimately they're thinking, they know they're going to have to gradually normalize rates. I think Chairman Powell clearly indicated that he's in favor of a 25 basis point move the first time around. And I think they're going to keep to that game plan as much as they can, while also being quite mindful of the increased level of uncertainty. But we see, as you point out, that some of that uncertainty is feeding into higher prices, and I think they really want to catch up as much as they can, as quickly as they can, without overdoing it.
It looked like a pretty, clear idea to, you'd be raising interest rates when you see inflation jumping like this. But now you get into a tricky situation where oil prices, which lead so quickly to higher gas prices at the pump for consumers, and you could be seeing $5 plus in terms of gas per gallon. That's a much trickier situation. It's harder for the Fed to do that without having additional pressure coming on the economy that potentially puts us into a recession.
Well, I think you're right. I don't know if I'd use the word recession, but I think what they're confronting is growth that is slower than otherwise would have been, and we've already seen some downtick in forecast. But let's remember, Becky, in the most recent labor force number showed it. They're starting at a place where the economy is growing really quite nicely. The unemployment rate now down to 3.8%. We're seeing a gradual uptick in labor force participation. So I think while they have to balance closely, the focus is going to be a bit more on making sure they hold on to their hard-gained credibility on inflation and be gradual about doing that to avoid the kind of downside risk that you're talking about. But they start in a place where the economy is really quite robust and quite healthy, which is a net positive for them.
Roger, if the Fed continues to watch this really closely, what's your best guess for how things progress? And obviously, this is a volatile situation. Things are changing pretty quickly. But if you had to make a guess right now, would you say they raise 4 times at a quarter basis point each time? Would you say 5?
I'd say 3, 4, and then take a look. Now, markets, I think we're expecting something like 6, maybe 7. There are 7 meetings left. It's a possibility, but given the uncertainty, I think what they would do is set a path towards several quarter point raises, but also have a moment to potentially take a pause and see exactly how this uncertainty is playing out. The good news is that markets are showing that they're really quite liquid, so we're not in an emergency situation. But I do think they want to be a little careful about not over-tightening and potentially unintentionally throwing us into something that goes from slower growth to recession.
Shepard Smith here. Thanks for watching CNBC on YouTube.